China's robust economic landscape, once revered for its staggering growth and burgeoning opportunities, now stands at a critical juncture. A confluence of pressing challenges has cast a shadow over its economic prowess, stirring deep concerns and signaling an era of profound uncertainty. The narrative that once heralded China as an unstoppable force in global economics is now nuanced with escalating worries and uncertainties. At present, China finds itself grappling with a multitude of intricate economic hurdles, each presenting formidable obstacles to its once unstoppable trajectory. The gravity of these challenges has heightened concerns among experts and observers worldwide, as the nation navigates through a complex web of issues that have the potential to redefine its economic landscape. In this video, we'll unpack the key aspects of this complex scenario, from the trajectory of China's economic growth to the issues plaguing its youth unemployment sector. We'll explore the real estate crisis that's been brewing over the last decade and shed light on the shadowy world of China's unregulated banking sector. Lastly, we'll consider the potential impacts on the US economy. Intrigued? Good. To understand the present, we must first visit the past. Let's explore China's economic journey that started back in 1979. Prior to 1979, relations between China and the United States were strained, marked by years of limited contact and mutual distrust. However, in a landmark move, the two nations officially established diplomatic ties on January 1, 1979. The normalization of relations paved the way for increased economic and trade interactions between the two countries. This included the expansion of trade, investment, and cooperation in various sectors, leading to the development of significant economic ties between China and the United States over subsequent years. Over time, China's economic growth outpaced any other nation, becoming the world's largest exporting nation in 2009. China's economic rise, however, was not without its controversies. Allegations of unfair trade practices started to surface, casting a shadow over its impressive growth story. Critics argued that China's growth strategy was not sustainable in the long run, relying heavily on state-led investments and a skewed trade balance. This strategy, while initially successful, started to show cracks as the economy matured and issues of debt and economic imbalances came to the fore. But with growth came new challenges. In 1998, China embarked on a mission to transform its economy into a knowledge-based powerhouse. The government dramatically expanded higher education, aiming to cultivate a generation of thinkers and innovators. It was a grand vision, but as the saying goes, the road to hell is often paved with good intentions. The expansion resulted in a surplus of college graduates, a tidal wave of young minds flooding into the job market. But the opportunities were simply not there to match. This mismatch led to an escalating youth unemployment rate, a ticking time bomb waiting to explode. In June, China witnessed a surge in youth unemployment, reaching 21.3%, up from 20.8% in the previous month. This is nearly 4 times the national level, affecting approximately 6 million individuals aged between 16 and 24. Following the abrupt reopening of China's economy, expectations were optimistic that consumer demand would spearhead a robust economic recovery. However, these expectations are dwindling as shoppers retract, exports decline, and foreign investments diminish. A concerning trend emerges as more young people across China's urban and rural areas find themselves unemployed. The looming concern suggests this situation might exacerbate as numerous recent graduates enter the job market during the summer. This surplus of educated young people, unable to find work, has serious implications. It's not just about the wasted potential, it's about growing social unrest, a generation of discontented youth. It's about the risk of a brain drain, with the brightest minds seeking opportunities overseas. Yet another crisis was brewing hidden within the concrete jungles of China. China's skyline tells a story of immense growth, but also of a looming threat. Over the last decade, a massive real estate bubble has inflated, casting a shadow over the nation's economic stability. Citizens, driven by the dream of owning their own homes, have heavily invested in property, pushing prices to soar sky high. This isn't just about a few luxury apartments in Shanghai or Beijing, it's a nationwide phenomenon, with cities and towns across the country experiencing the same inflationary pressures. However, the government's response to this ticking time bomb has been, at best, sluggish. Regulatory actions to curb the runaway real estate market have been delayed, often coming into play only when the damage is already done. This lackadaisical approach has led to an economic slowdown, with the property market's instability rippling out to affect other sectors. As if these issues weren't enough, a shadowy threat emerged. In the unregulated sectors of China's economy, shadow banks thrived. These non-traditional banks, operating outside of typical banking regulations, are heavily tied to the real estate market. With less oversight, they've taken on substantial risks, leading to a precarious situation. As the real estate bubble bursts, missed payments have begun to pile up, sparking protests and signaling the emergence of a potential crisis. This shadow banking crisis is yet another ticking time bomb in China's economic landscape. But what does this mean for the United States? The US, like many nations, is intertwined with China's economy. America's exposure to China's financial crisis comes from direct investments and trade. From Wall Street to Main Street, investor behavior could cause some disruptions in the US economy. Yet when we stack up these potential ripples against the tidal wave of issues China is facing, the impact on America seems relatively minimal. As we forge ahead into the future, we must remember, China's economic challenges are far from over. China's journey towards economic sustainability is a long one. As we've explored, China is at a precarious juncture, facing a myriad of economic challenges. The ticking time bomb of debt, escalating youth unemployment, a bursting real estate bubble, and the looming shadow banking crisis all paint a picture of a nation on the cusp of economic upheaval. The road ahead for China's economic sustainability and growth is steep and winding, filled with hurdles that need to be overcome. The country's economic trajectory, once a dazzling display of rapid growth, is now overshadowed by these imminent threats. It's clear that addressing these fundamental economic issues is pivotal for China's future growth potential and to maintain its global position. China's economic journey is akin to navigating a complex labyrinth, a path filled with twists and turns, but with resilience, reform, and strategic planning, there's a way out. However, China must address fundamental economic issues to sustain its growth trajectory.